Last week, we talked about planning your availability for 2024, and now I want to talk about how to actually plan the income that goes with that availability, just in case you need a little bit of talking off the ledge. I feel like we all need that in the beginning stages, or pretty much any stage as you change your prices. So, yeah. Let's do it together. Before I dive into that, though, if we haven't met before, my name is Caitlin. I run Launch the Damn Thing. I am a Squarespace web designer and educator. So I know a thing or five about being in the design industry. I've been in it since 2006 and have been running my business since 2015. I went solo or full-time in 2020. So I'm happy to share my learning experiences with you. Let's dive in together. First, I have to say, I am not a financial expert, right? I am not pretending to be one. I do not claim to be one. I will not tell you that I've got it all figured out, but what I will tell you is I finally figured out how to pay myself. So I'm going to share what I learned with you because we all need to know how to pay ourselves. If you've only ever worked for somebody else that just handed you a paycheck every week, every other week, every month, whatever the schedule was, you don't know where to pull that money from and how often to hand it out to yourself. I'm just telling you. So first I want to start with what my thoughts are on the whole charge what you're worth. Oh, that's a tough one. How do I say this without pissing somebody off? I actually think that this is sort of a toxic way to think about it because in all honesty, when I was first getting started, I had no idea what it was worth and I was just guessing and I guessed really low. And then as you continue to build experience and you forget that your worth increases with said experience, you kind of get in this rut of like charging what you're worth and you don't really know what you're worth and you don't know that that worth is growing, and then you can kind of get yourself locked up into that, and then you can start to equate what you're worth with what your services are worth, and yeah, it's kind of a spiral. So I don't love how it's worded. I understand what it's meant to say or mean is to charge for the worth of your skills and experience, and that is based on how much experience you have, where you learned your shit, like a lot of different variables. So that's what the charge your worth thing is. I don't love how it's worded. I understand the general concept. That's what I did in the beginning, but I found that it was very easy to lock myself into some sort of comparisonitis there, because if I was charging $25 an hour and this lady over here is making six figures, I was like, ooh. Like, not fun. So it's really easy to compare yourself to other people that way that have more experience than you, that have more skills because they've been in the game a lot longer, etc., etc. So it kind of sets you up to compare yourself to others is where I was going with that. The method that you would hear business owners say, well, like, you charge what market value is, right? You charge what people will pay. Yes, to a degree, but if someone tells you that your house is only going to sell for $400,000 because that's the market for the neighborhood, that's what the comps are, every other house in that neighborhood is selling for that price, and this one cat comes in here and he's like, nope, we really want that house, we'll pay you $750, and you're like, no, that's crazy, we don't want to move, we don't want to leave, like, we've decided we're not going to sell. And he's like, I'll pay you $1 million. And then you're like, okay, let's talk. That person is super interested in that specific house and this specific, there's reasons why he's interested. The same thing can apply to service providers also, if the situation is correct. But again, there's lots of variables here. So also not a good way to rely on or reliably price your services, I feel, because that changes and fluctuates based on the scenario. Okay, so that's worth-based pricing, market-based pricing. Now let's talk about value-based pricing. This is my favorite personally because this is price based on what I feel I bring value-wise to the table. How does my offer potentially generate revenue for this business in the future, potentially help them get clients, potentially work towards or start working towards ranking on Google? Does it do things for the business owner that a normal site wouldn't do? Is there automation built in? Are there integrations? Did I coach the client through some basic business decisions when they were choosing CRMs or choosing schedulers or whatever? All the things that I tend to do during my custom builds, by the way, as opposed to someone that's like, I will build you a website. Right? Those two things are completely different. So there's a reason that we pick our price. Sometimes we pick our price based on the fact that we need to narrow down the number of inquiries that are coming into our inbox. So for example, if I listed my prices for custom websites at $1,800, I would get too many inquiries that I literally would not be able to fulfill. I could not get all of those projects done. So I don't charge that rate for a number of reasons, but that's one of the reasons why I bumped it up to start with. I needed to change the type of person and the amount of inquiries that were coming into my inbox. So that is playing into it as well. So if we talk about value-based pricing, we're talking about what are you bringing to the table? What is your experience level? How long have you been in the industry? What can you provide? How much better is that from what they might get from competitors? There's a lot going into it. There's a lot of factors there. So marinate on that. And then once you've kind of decided which way you're going to lean, it's up to you, right? There's not really a wrong answer, I don't think. It's only what's good or bad for you specifically. Then you need to pick your rate. And this is the scary part for a lot of people. Now that we're ready to pick a rate, let's talk about how you actually do that. Because a lot of new business owners, myself included, were like, pick a number out of the air that's higher than the hourly rate that I used to get. That will work. I won't say that's wrong, but it was definitely not the best choice we could have made. And it took me a lot longer to reach a point where I was getting work that I didn't resent because the amount was too low. First, I wanted to start you with going to Amazon or wherever you like to buy your books and buy the book Profit First by Mike Michalowicz. It's not a finance book like you've ever read. I promise you, you will laugh. It is an actually entertaining book. He is not a finance guy, but he does teach you how to manage your business money. And a lot of us do not know how to do that. I tell you literally, without this book, I would not be where I am today. I follow this and have followed this plan for 3 going on 4 years now. The book is on my bookshelf behind me. I have a hard copy, a Kindle copy, and an Audible copy. I am not kidding. Buy the damn book. Okay, so let's pretend you just went on Amazon and bought the book. I have the link below just in case you're like, I don't want to look for it. How do you spell Michalowicz? I don't fucking know. I'll put the link below. Okay, so let's pretend that you just bought Profit First. Let me explain to you the general concept of Profit First. Think of your money like a bank account that has different buckets. Every time you put money into your bank account, you drop parts of that money into a different bucket because you're giving it a job to do. Every bucket is a representation of something that you should do with your money. Those buckets tend to be in these 4-ish categories. Owner's pay, that's paying yourself, by the way. That's where your salary comes from. You're like, I don't have a salary yet. You will. Keep listening. Owner's pay, expenses, taxes, profit. There can be more, obviously, but the percentages vary. You kind of need to know what tax bracket you fall into to set aside enough money for taxes. You kind of need to know what your expenses are so that you set enough aside for expenses. Your profit is lower than you think, and the owner's pay is lower than you think. All of the buckets, right? They collect money in percentages that have to equal 100%. Right? So if you're still following me, for example, the way that I do it in my business, 50% of everything that I make in my business, every single dollar that is deposited into my bank account, 50% of every deposit is going into the owner's pay bucket. 25% of every dollar that I make in my business goes into taxes. 20% of every dollar I make goes into expenses, and 5% of every dollar I make goes into profit. So at the end of the year, I can use it as savings. I cannot touch it. I can use it to give myself a Christmas bonus. I can totally ignore it and see how much it builds for the next year. At the end of the year too, I have taxes set aside from literally every dollar that I made, ready to pay my taxes, so that April 15th is never a surprise and it's never a stressful period. It also helps if you hire a bookkeeper and a CPA for that. So pro tip, I have a bookkeeper that I hire every quarter to help clean up my books. So by the end of December and into early January, the entire year is done. As far as the bookkeeping goes, I have a document that I can send to my CPA, and all we do is wait on my husband's tax information from his job. Easy. So I have a bucket for owner's pay, a bucket for expenses, a bucket for taxes, and a bucket for profit. Now, Mike in the book will tell you that you need totally different bank accounts, and you can do that. I prefer to keep things simple. At this stage in my business, it works well for me. I assume at a different stage, maybe one or two higher than the one that I'm at right now, I probably will want multiple bank accounts. But right now, I use a software company called Novo. And Novo is incredibly profit first friendly. It can segment your money from one account into sort of sub accounts. So it's all in the same account, but it's divvied up into literally digital buckets. And it does this for me. I do not have to allocate anything myself. I tell it this percentage of every deposit, and it literally does the rest for me. So all I have to do is open my account, look in the different folders, and see the total in each bucket. And that's how I know how to stay on budget. And I cannot tell you enough how much this has helped me. Anyway, that's profit first. Go buy the book, go buy the book, go buy the book. It will help you. I promise, I promise, I promise. It makes bookkeeping and accounting generally a lot easier. I will also link some resources in the accompanying blog post in case you want to dive in a little bit further. There's some great podcasts, and there's a great bookkeeping system, membership kind of thing that you can join in if you actually want some hands-on DIY help. Not for me. I don't do that, but somebody else that actually does. That's profit first. If you want help playing with some of the numbers, go grab my pricing calculator template. It is very affordable. It's just a Google sheet. There's a couple of formulas that you have to tweak, and everything else does the math for you. So go check it out. And there's also a help doc that will walk you through changing the formulas, updating the percentages if you need to, those kinds of things. So go grab that if you want help doing the calculations. I get it. I'm not a math person either. So thank you, Google Sheets, for doing the formulas for me. The next thing that I want you to do when you kind of have an idea, I want you to do a time audit. So for a week, every hour of your weekday during a week, I want you to stop for a minute and write down everything you were just working on and approximately how long it took you to do that thing. If you don't know how long something actually takes you, you really can't plan for an allotted period of time to do a project. For example, if you have no idea how long it takes you to do a website, it's going to be kind of hard to plan your whole year. I happen to know, because I've been doing this for a few years now, that I can do a website in 2 weeks. I can do a branded website in 3 weeks. And I have free time during that time. Audit your time. If you need to know what it's like to balance a project on top of blogging and or YouTubing, or balance a project on top of whatever other business admin work that you have, you need to be able to track your time and know approximately how long a project is going to take you before you can commit to charging this rate for this set period of time. Right? That's really important. You do not want to be in a situation where your projects drag on into Never Never Land, because that will affect things that you could have booked after that. It's harder to charge people when you're in the middle of the project. Just don't go there. You could if you want to. I will not encourage it. So auditing your time will help you be realistic with how long it actually takes you to do these things versus how long you think it's going to take you. Sometimes we overextend, sometimes we underestimate. So you really want to be more accurate. So make sure you do the audit. And you don't have to get fancy with it. Just get out a piece of paper, a notebook, open up notes on your computer, whatever. The last piece of advice I have is to practice. So if you did not get the pricing calculator, which will do this for you, basically what you want to do is practice with some numbers. So get out your calculator and pull out a number. It can be right out of thin air. If you have no idea where to start, that's totally fine. Just grab one, write it down. This is going to be your hourly rate, right? So pick a number for your hourly rate. Multiply that number by 2. Remember, if you're following the profit first system, and I highly encourage that you do, you are only paying yourself half of whatever you're actually charging. So if you want a certain amount, multiply it by 2. Then once you have that figure, your hourly rate times 2, that's your new hourly rate. So that's your new number. Multiply that by however many hours you think it will take you to do the project, and that can be your starting point at what you think will be workable to actually charge people for said project. That's the starting point. You can, and I encourage you to do this too, have a range on your website where you talk about your services. So have a starting point at, like, let's say the number that you arrived at is $2,000. Have it start at $2,000 so that when you get an inquiry from someone that wants to migrate their WordPress website to Squarespace, for example, and you have to go through all their blog posts and that's going to take you 10 extra hours, you have budgeted in the wiggle room on that discovery call to say, I know I normally charge $2,000. I think this one's going to be closer to $3,000 or whatever the number is going to be for you. So go ahead and budget in a couple $1,000s more so that you have a cap, what you will never charge more than at this current time and what you will never charge less than. And if you get a range, if you display a range on your services page, then at least your clients know, like, the starting at price might be this, but we're not going to reach $10,000 or $20,000 more than that, right? That's a little bit scary to some people that have never done this process before. So if you put a range, that at least they know what the cap is and they can plan for that. Then it's always a good idea if you have extra expenses. For example, if you tend to buy fonts for your branding packages, or if you tend to hire a copywriter, or if you tend to purchase software or code plugins or templates or whatever, and you use it in the project, add that on to your price because that is a business expense and you need to add that to the cost that you are charging the customer, especially if it's for a specific person. Just be really careful with licenses because technically they're not transferable in most cases. So your client will need, like, for example, if you buy a custom font, that's your license, not the client's. The client will need to buy it also. So just be careful with that kind of thing, but make sure you're factoring that stuff in. So don't undercharge and then decide to also go buy all this extra stuff because that's cutting into your profit margin. That's cutting into your paycheck. The last piece to this is, of course, paying yourself, and that is the most important piece. So here's what I've learned in the last year or two, because yes, it did take me that long to figure out how to pay myself. If you use a bank with a digital profit first friendly system like Novo, there are others, I'm sure, but if you use something like that, it will automatically dump all of your income, all of your deposits into these buckets for you, which makes it a lot less tempting to go back in there and move some stuff around. It's sort of like having your 9-to-5 paycheck get dumped into a bank account and the bank decides where to split your money. It goes into a mortgage, it goes into a savings account, whatever, right? It's kind of the same concept. So pick a bank account that will make it easier for you to be smarter with your money, first of all. The second thing is your owner's pay bucket. This is where you pay your salary from. And so if you have a lump sum in there, you decide on a number that you want to pay yourself. It's going to be small at first. It's going to be smaller than you think. Pay attention to this amount. Watch how it grows with the deposits that come in. And with some regularity, you'll realize what number you can sustain for the longest period of time. So when I first started paying myself on a regular basis, I was paying myself $1,000 every other week. And that was also during a period where I was actually hitting 10K months here and there. 5K months were more average. 10K months happened multiple times a year, but I was still only paying myself $2,000 a month. So $1,000 every other week. And that's because I knew I had enough in my owner's pay folder, essentially, or my owner's pay sub account to pay myself that amount for a very sustainable period of time. So I could guarantee that at the minimum, I could give myself $2,000 a month for pay. So make it a smart choice. Don't just pull all of it out and then go, where did it go? Because that will absolutely happen if you do it that way. And also, it's harder to guarantee that you can pay your bills when you pull out $10,000 one month and then there's nothing left for the other months. If you are using an account like Novo, all you have to do is transfer that money to your personal bank account. So you don't have to write yourself a check. You don't have to go into QuickBooks and sign up for payroll. If you are just figuring out how to pay yourself, most likely, and again, I'm not a financial expert. This is just an assumption. We all know what assuming does. Yes, I know. But it's just an assumption that you probably aren't, for example, an S Corp LLC that has yourself on a payroll and you get a rigid paycheck every week or every month or whatever. You just transfer that money to your personal bank account on a regular basis. So what I do is I have a Google Calendar event that reminds me when to deposit my paycheck, and I do it on a Thursday, so it'll be there on a Friday. It's very easy. So the next year, if that number needs to change because our businesses grow and evolve and we need to pivot and our audience changes and we book too much or we book too little or whatever. So take a look at the way things went the previous year. I've heard some people say that you should take an average check, so an average payment of what you made on a month-to-month basis, I think it was, in the previous year, not in the current year, which is actually pretty smart. But it's going to feel slow to a lot of people. So I'll tell you, you can do it if that feels good to you. So if you go by that system, basically you're saying I made this much in owner's pay in the previous year, average that out into months, and that's how much you pay yourself per month. And if you want a bi-weekly paycheck, then you split it into 2. So easy peasy. If you want to do it that way, that's probably not a dumb idea. That said, when I started, I made nothing the previous year. I broke even because I spent just as much as I made on and reinvesting in my business. So I didn't have anything to average out. I just had to start with the income that I was getting. So we all got to start somewhere. Pick a method that works best for you. And of course, if you're not sure, go ask a bookkeeper or a money coach or a CPA or somebody who knows more about this shit than I do. I'm just telling you what my personal experience is here. The essential goal here is that every year this will change and you can graduate up or down based on what you did that year. I just listened to a phenomenal podcast where they were talking about this exact thing. And the person actually shared their real pay myself numbers. And it was not the sexy 6-figure numbers that you might hear from basically every other human on the planet in this space. So I will link that also as a resource in the accompanying blog post if you want to go check that out. I do encourage it. It will make you feel better. And it will also inspire you that the goalpost is not quite so far away. So if that's kind of where you're feeling, definitely go check out the blog post for those resources. If you got all the way to the end of this and you're like, oh, okay, I hate this part. I do not like the math. I hear you. I'm an art major. I did not enjoy math either. In fact, fun fact, when I was little, in Miss Rose's class, which I think was first grade when we started learning long division, whenever that is, I would literally grind my teeth in class. I hated that class so much. Loved the teacher, but I hated math, the subject. Now as an adult, I love spreadsheets. I do not love math. So I can relate. If you hate the numbers, I made a spreadsheet for you because I love spreadsheets. I do not love math, and it can do formulas for you. So if you're sitting here thinking, I would love to do that without a calculator, go check out the pricing calculator Google Sheet in my shop. Save yourself the headache. I hope this was helpful for you, and I hope that it was easier to see or insightful to find out how someone like me started paying themselves when I have no background in finance, no background in business sense. I've just learned from my own mistakes. So I'm hoping that my mistakes and what I've learned from them and the experience that I gained and how I've pivoted and changed, I hope that it's going to actually give you the ability to do the same thing, because we all have bills to pay. We want the feeling of having a stable income. And if you do it this way with the profit first buckets, and if you price your services at a reasonable rate and don't undervalue yourself or your experience, and you get good clients or any clients, and you're able to actually earn an income, then you don't want to throw it away by accident just because you don't know how much money goes into each bucket. Because here's the thing. If you have a lump sum in your bank account, let's say you log in and your bank account says $5,000, but that's all you know. You don't know how much of that is needed to set aside for taxes, for expenses, or for pay, because it's all in one lump sum. So unless you pull it out and put it into envelopes or literal buckets, or if you move it around, it's going to get lost. And at the end of the year, you're not going to have anything set aside to pay your taxes. You're going to be stressed out. You don't know how much to pay yourself, so you will either not pay yourself or overpay yourself. You won't be profitable because you haven't been setting aside actual profit all year long, because we have to do this on purpose. If you don't do something with your money, if you don't give it a job, it will not work for you. That's all I have for you today. I will see you in the next video. Bye.